Okay, and hello everyone. This is Wayne again. It's Wednesday, April 8th, and I've got some more trading action to go over with you to really show you how we can make a living trading stocks, day trading, in a small amount of time. And we traded again Apple and Boeing today. I'm not going to talk about Apple at all. Maybe in another video I'll go over, but again, our setups worked like gangbusters on Apple, but I was really focused a lot on Boeing today. And as I'll show you in this video, it's got an important concept to understand that you truly can make a living even when you're wrong. We made money even being wrong and Boeing going totally against us. So I'm going to show you how that's possible. Whether you believe it or not, I'm going to prove it to you. And I'm going to prove it how you can make consistent money taking, again, our calculated entries at specific levels with a plan and specific rules using very simple setups, not a lot of thought, not a lot of skill, and make a living doing this. So here we go. Start the presentation. Oh, and incidentally, I have people telling me I need to have my face screen in screen of my face as I'm recording these videos. I will. I'm just a rank amateur right now. I'm having to hold my mic. I'll get squared away. Don't worry. I know it's rank amateur, but we'll get that so you guys can see how awesome and handsome and guapo I am. And anyway, let's move forward. Okay, so today we're focused on Boeing and Apple again, but I'm only going to be talking about Boeing. We come into the open, there was a large opening gap up on Boeing. Yesterday, the thing sold off all day. Then we come in with a surprise opening gap this morning. So the thing to remember is we have no idea what's going to happen. The stock can go either way. So we don't know what's going to happen, but I'm going to tell you, even in the uncertainty, we can make a plan and make money on a plan, not knowing which way the thing is going to go. Is it going to go up or down? We don't know, but we can attack it at specific levels and still make money. So the thesis was at the beginning of the day that, okay, the stock gapped up, it went higher, and then it reversed at a what we call a pivot level. You'll see these are horizontal lines marked on my chart. Don't worry if you don't know what those are. It's a common thing. I'll show you one of these days how to get all that set up. But anyway, so it gaps up and then goes up to one of these pivots and then reverses, to the penny at one of these pivot levels. So as it's coming down, price is above our 8 and 21 EMAs. These are the yellow and blue dental floss looking lines I'm always talking about, which are so important. So I'm going to be looking for longs. That means I'm going to look for an area to buy in for a continuation of Boeing back to the highs or higher. Okay, that's the thesis. So the setup is I wait for a pullback, wait for price to pierce that 8-period exponential moving average. I call it 8 EMA for short. Okay. You'll see on the chart in a second, but there are in that same area very close to the 8, there's the 55 exponential moving average and also the 21 plus another pivot level. All of this gives us a lot of support. Additionally, there's the gap itself. So on a gap up, usually what happens is they try to sell it back down, suckering in the buyers who buy the gap. Anyway, there's a lot of games in the stock market, but generally when a gap happens, they try to fill the gap, but that gap also acts as support once price penetrates into it. So that's what they're going to try to do. The guys who want to buy try to push it back down into the gap and buy so they can buy at a lower price. Anyway, that's more than I wanted to get into on that, but we're looking for a setup where it pierces our 8 EMA. Let's keep it simple. Okay, 10 a.m. Eastern, so 30 minutes after the market opens. The stock pulls back, pulls right into that buy zone we already have mapped out. We have a clear idea. We're sitting there waiting for it to come into that zone. It hovers there a few minutes. We have plenty of time to enter on this one. So the stock pops up from that buy zone twice. In other words, that gives us 2 chances to make our 20-cent moves on our options for quick profits. That's what I'm always talking about. We're shooting for 20 quick cents in profit on the option price. I'll cover that in detail in a few moments. All right, so it pops up, we get our 20 cents, then they push it to try to go lower and fill that gap. But as I said, and as we know, we still have other support levels with the 21 EMA, the 55, the daily pivot, all give us confidence where we can add in again. So we do. It pops up again, gives another big pop for another 20 cents, comes right back down again, and we add again. So in the span of, about 20 minutes, 20, 30 minutes, we've taken 3 times quick scalps getting 20 cents, 3 times each. Okay? Here's how it looked. So it went up, hit that resistance up there, pulled back, and here's how it looked when we were buying. I actually bought when it was, you see the candle where the green arrow is, it was all the way red at that time. It's just, I'm trying to enter trades. I can't always get a screenshot exactly at the moment. So I entered my trade and then took the screenshot, if you can sort of see what happened. And there's an immediate reaction. So understand I'm trying to do multiple tasks at the same time, trying to capture these in real time so you can see them, not talking after the fact. But it's hard to capture both. That's the way it looked, right after I bought in. And so here's the second one. So the first one popped up, got the 20 cent profit, comes down. That's another perfect buy again. It looks horrible, looks like it's going to fail, but that's what you have to trust. Now, sometimes these setups feel like, it's kind of like you're in the crosswalk on a road and you're thinking about stepping out into the road to cross the street and wondering if all the cars are going to stop. So our lines, and in this case right here, we have 2 or 3 of those lines clustered together. It's like a crosswalk. So I am trusting when I walk into that crosswalk, that price is going to stop and reverse there, just like the cars, if they were coming down the street, would stop and let me cross the road. Sometimes it doesn't happen, and I would get run over in the street, but in this, they'll run right through and run over you, and you're out, you lose. So that's where you have to be quick to exit and get out. Otherwise, you don't know how far it's going to go down against you, but it's very, very rare. I'm telling you, 80% of the time, this is exactly where you're going to get some kind of reaction, enough to give you a chance to do something about it. So here we go. It pops again. And then it comes down a little bit later, and we get our third entry and another pop right after that. Now I've captured actually a little bit bigger of the move right here, but just because again it's hard to manage the trades and take screenshots and all of that, but this is how we're sitting there with three positions where we booked a quick 20 cents, and now I'll talk about how to manage in the next little bit here. So let's take a look. So we, at this point, we've made three entries and got quick profits of 80% of our position in each one of those. Okay, so we booked 80%. That means we're still holding three positions with only 20% of that original size in case this thing goes for a bigger move. We have a plan to exit each one of those in stages. Okay, I'm making the plan before. I'm not, I don't have that. I have rules for decisions which make it easy to make a plan without trying to guess anything that's going on. And then that's where we get in trouble. We start guessing and get greedy or let everything come back against us. We're avoiding all that with a carefully constructed plan through discipline and precise action. It's going to bank us our money and eliminate all the psychological stress and anxiety. So the plan is we're going to exit one of those three when price goes up into the daily pivot. That's the yellow horizontal line you're going to see right above. Let me back up. So right here, you see it popping into that daily P, that yellow horizontal line right there. So that's where we exit one of those three that we're still holding a little bit on. Okay? Going back to here, even before it's happening, I'm taking the second one off. See up there where that blue, there's a little R1. I don't know if you can see it. That's called the R1 pivot level, resistance level. And it's also, you see those spikes in the opening candles where it sold off at the open. That's my next target. So I'm going for that blue line with those spikes that are already from the morning highs. That's going to be my second exit. I already have that as a plan. So that's where you see here, plan for exit 2 is on approach to that R1 pivot. And there you go. Is that clear? So there it is going up into the pivot. And there's the second move. It continued higher and like textbook right into that R1. Now I'm out right there. I'm selling my second position right out right there. This thing could go up all day. I don't know. I don't care, but I'm taking a disciplined exit at a likely area where I know this thing can potentially reverse. I don't care what it looks like at this moment on the screen where I captured it perfectly. I'm exiting my second one right there. No questions asked. And I don't wait and see if it pushes higher or anything else. I'm out. I want you to get that. I'm locking it in when it's there. So boom, as you saw, it played out perfectly. It got to that R1 blue horizontal line. Now we're still holding the third. So what do we do now? All right, we're going to go back and see where it can get to. I'm looking at the chart. I see another pivot level higher up, and that corresponds on the chart with action from yesterday that was resistance yesterday. And so I decide to see if I can hold it and see how, how the stock price performs once it gets up there. If it starts stalling, I'm going to close it. I'm not going to wait around. I'm going to close it and bank that profit. Okay, now also I know I'm doing this is all after the fact, right? I'm a genius after, after everything's happened. It looks like I'm a genius, right? Hindsight. But, I'm telling you the truth here. There's no reason for me to be dishonest. So I'm telling you exactly as this thing is unfolding, and I'm trying to give you screenshots in the process and telling you my exact thought process I'm going through at the time. I'm not giving you, oh yeah, I'm a genius, here's how I would have done that, blah, blah, blah. I'm showing you this so it can give you a way of how to make a plan so you can decide at certain decision levels along the way what to do, okay? So if we look back up at this, bigger chart here, that next blue line is way up there at, like 154.60, something like that. And if you look to the left over there, you see that's where Boeing was selling off yesterday. You see those? That's where the drop started. So I know it may hit that R2 or it may stall before it. That's a good enough move for me if it gets up there somewhere close. We also see the $154 round number. Sometimes they like to try to hit a round number. So you could say, okay, I'm going to hold it to 154 or that R2 and see what happens. Or you could set your sell order for 154. Sometimes what I do is I just hold my finger on the trigger and I just sell it when it gets up in there. So it's up to you, but you'll figure out your own little tactics. The key is we have a plan so we know exactly what we're going to do at each stage. So as you see, it pressed on up there, and there it is going up. It's at 153 right there. I've got my finger on the trigger. It is on the sell button to sell. And the second I see any kind of stalling, I don't care how this thing looks like it's going to rip up higher or not. I've got my finger on the sell button, and the second it stalls, I'm out. I also want you to notice it's near 12 o'clock noon. That is typically when, all these guys that bought into this thing in the morning are going to either, all the day traders will close out and go to lunch. All the robots will start shutting down and looking for reversals. There's a lot of other factors at play. So I try to be done between 11 and 12 on my positions so that I don't sit there and let this thing come all the way back against me. So these are all the things that are going through my mind at this point. All right. So here, this is the summary of what I just said. I'm thinking, can it go all the way to that R2? Come on, come on, come on. Can you make it? But at the same time, my finger is right there on the button. So the second it stalls, from that congestion from yesterday, I'm out. I don't care how strong the stock looks, like a spaceship. The rocket, they don't go up forever. Believe me, they do not go up forever. Same thing, they don't go down forever. And also, as I said, timing is key because it's approaching the noon lunch hour. These guys are going to want to shut down and go to lunch, right? So there's a saying we have, and that is pigs get slaughtered. And that means don't get greedy. Don't try to hold it and think it's going to keep going, because they'll stop and turn around against you and just come all the way back to nothing, and you give up all that profit. So this is a very important lesson I'm giving you here, that it takes a long time for a lot of traders to learn that lesson. And you'll see why in a little bit later. Okay, so let's say that price went to 154. Okay, that is exactly where it stopped dead in the tracks. It didn't hit the R2 pivot level, and it reversed right there at 154 like a brick wall. So that's what I'm trying to tell you. You never know what's going to happen. So at the same time it starts coming down, we don't know what's going to happen with the down move either. Is it going to pull back for another run higher later? Is it going to consolidate and sort of digest right there below 154 and go higher? Is it going to form some kind of bull flag? We have no idea, okay? So I don't care what it's going to do. I have money sitting there in profit. It's almost lunch. My choice is to put that money in the bank, get out of the trade. It's over, and then I'm going to look later on for another setup, which is typically going to be that know your limit to the 21 EMA later. So that's almost a routine I have. So I will get that morning push, get out of it, and then I'll wait for a pullback to the 21 EMA later. If that doesn't happen, I don't care. We made money on the first one, so we're out, done and dusted, money in the bank, and we have a clear mind to eat lunch or do whatever and look for other trades. This is key, so important. Well, what did happen was price dropped all the way back down. So if we were sitting there holding that, hoping for a move, higher, and all day move, guess what? Didn't happen. We would be sitting here all the way with no money, no profit. It came all the way back down against us, and we would have been. That's one of those psychologically taxing positions where, oh, it was in my favor, and then it came all the way back down, and then even went against me. So we're avoiding all that. So price drops down lower, it pierces the 21 EMA, and guess what? We have two more of our little squiggly lines and support levels right below that give us another perfect buy zone. And here's what it looked like. So right here, that horizontal line, that's the yellow line, that's the daily pivot again. That orange squiggly dental floss, that's the VWAP, volume weighted average price. You don't even have to know what these lines are, what they mean, anything. You just have to know they're important. You don't have to know, like it's like your car. You don't have to know how the transmission works, how the engine works, how the ignition and fuel injection. You don't have to know any of that. You just know that you get in it, you drive it. Same with these. You don't have to know why these lines, what they are, how they're calculated, any of that. You just need to know that the reactions are significant on these lines, and it happens over and over and over, day in, day out, and you can make money on these reactions. That's all you need to know. So simple. Keep it simple. So we get that penetration right through the VWAP. It touches to the penny that yellow horizontal line, and look at it, it already bounced off of there. So we're in right there. Okay. Again, we're in, and we stick to our rules. We're not greedy. We have an exact plan. Our rules say we bank 20 cents in profit on 80% of our position. That means as soon as we make our entry, we're putting our sell order already in the system, 20 cents in profit. There's no thinking, no emotions. There's no decisions to make, how long we want to try to hold it or anything. That 20-cent profit is in there immediately after we've made entry. And in this case, as in so many others, price immediately reacts beautifully right after our entry, and we get hit on our profit target. Okay, so again, here's how it looks coming in. It looks very bearish. You remember when I'm talking about you're walking out into the street or into the intersection in the crosswalk. You're trusting that the cars are going to stop. It takes a little getting used to because price is just, I mean, look at that. It's just plummeting right into there. But lo and behold, in the middle, I mean, the guys who don't have these lines on their chart are just baffled why there's a reversal right there at that exact level. But we do have the lines on our chart. That's our unfair advantage. So again, it looks, we don't care what it looks like coming down. We're not waiting for confirmation. We're entering at a specific level and anticipating. This is anticipation. This is huge. This is why we get in before and don't wait for confirmation. And that's why we get that beautiful reaction. It's a beautiful scalp, 20 cents in the bank before you can even blink most of the time. Okay, so there it goes. It pops right up into that. Remember that R1 from before? It goes right to there. All right, so on that pop, we banked our 80% of the position. We didn't think, no stress, no decisions. It was our rules that decided everything for us. I can't tell you how pure this is because I mean, yes, there are emotions in trading, and I think I mentioned that before. That's what kills most people because they get all emotional about everything. Of course, and also everyone says, well, you have to trade without emotion. Well, what I've learned over the years is you cannot trade without emotion. The emotion is there. So we've come up with the best way to actually deal with the emotion, and that is having these specific rules and this specific process that takes care of almost automating everything without our emotions being involved. Of course, it's emotional. And the other thing is we have no idea what can happen next, so there's that uncertainty. This is how we're dealing with the uncertainty. Price is rushing down, it's dropping, it's a waterfall down into us. But we still enter not knowing what can happen next. And boom, we make our money and we have no risk now. So we're anticipating that reaction, and our rules are taking care of the emotions for us. That is so huge. I can't emphasize it enough. So here we go. We got that 80% off on the first 20 cents. That was very quick. We're still holding 20% of a position. And I'll explain in a minute what that means. So we now are setting a stop, what we call a stop order, so that if price comes back down, we're at break even. It takes us out. So we got our 20 cents. Now we put a sell order, so if it comes back down, we're break even. So we don't lose. Don't lose anything. And we're using the charts So I've got two screens, right? In fact, I'm doing this on two computers. I have the charts on one computer, and my got all my little dental floss lines on that, and that is where I'm deciding when to get in and out. And then on another screen or on another computer, I've got my trading platform where I'm actually buying and selling the options. Okay, so there's a lot of multitasking. So let me talk about now how this is going to look in the options. Okay, in a second, I'm gonna show you how the setup looked again so you can see how it's developing. So we're sitting here, we're waiting for price to come to us. Yes, it's falling. It looks like a waterfall. But we're sitting there with a finger on the buy button. We've already predetermined what option we're going to buy as soon as our little dental floss lines there get pierced. Okay, so, and we already know what lines those are. I told you it's the 21 EMA, the blue one, the orange one, that VWAP, and we also have that yellow horizontal line. Any of those that get pierced, we're buying. Finger on the trigger. Okay, what we're going to buy is calls. So calls means you expect the price of the stock to move up. So that's the name of we're going to buy call options. Price is going up. We buy the first out of the money strike price. Don't worry if you don't understand any of this. We'll go over it eventually. We're looking for this week's expiration. Okay? Again, don't worry if you don't know what all this means. And we're going to buy at the limit bid price. So I'm watching. The price comes down, starts piercing those lines. And I'm looking at the strike price. I look at the limit bid. I look at the bid price and I click on limit. I put a limit bid order out there, and that means I'm going to be buying at one of the lowest possible prices. As the stock approaches the lines I'm talking about, if you look on the chart, I'll show you in a second, that would have been the $150 calls. That's the first out of the money. Strike is the 150 calls. So at our point of entry, the limit bid price was $4.65. We were buying the $150 calls. Okay. So now when you buy a call option, a call represents 100 shares of stock. What that means is, say we pay $4.65 for one call. Well, then the amount of money that actually costs us to do that is $465 because it's $4.65 per share, and one call option is 100 shares of stock. So that's how we get that. That's how much it costs. So whatever the price is on an option, multiply it by 100, and that's how much it is in real dollars for you to buy it. Okay. Now here's another thing. That is our total risk. This is the beauty with options. We know the risk as soon as we buy because it's however much we pay. So if we're completely wrong, the most we can lose is the amount we bought in the options. Okay, so for this one, if Boeing goes bankrupt or our option expires worthless, whatever, the absolute most we can lose is $465 times the number of calls we buy. So if we buy one, it's $465. Okay, so the advantage on this is we're actually choosing and we know the total risk before we even enter. Okay, so conversely, if you buy 100 shares of Boeing and it goes against you by $5, then you're going to lose $5 times 100 shares, that's 500 bucks. That's how much you can lose. If it goes $10 against you, you're going to lose $1,000. In our case, if Boeing goes $10 against us, the most we can lose is $465. So I hope that's very clear. I'll continue to harp on this in every video I do. But the most you can lose, worst case scenario, is the amount you buy into the that you pay for the op. That's the most you can lose. That's why you can absolutely control your risk when you're going in. Buying the shares, you can't do that. You have to decide where to get out. Like if it drops $1, you're going to get out, whatever. But if you decide not to and it keeps going down and down and down, you can keep on just losing thousands of dollars. That's how everybody goes broke. Okay, so another advantage on this is we can buy Boeing stock with only $465. We can make a $465 bet. If you were trying to do shares on Boeing, buying common stock, even to buy 100 shares at that price where we did it, it was $149. So you would need $15,000 just to buy 100 shares. Okay, so we only needed 400. So 465 was the total amount we needed, and we got the equivalent of 100 shares of Boeing. I mean, that's just so outrageous that we can participate with options this way, but a lot of people don't get it. But you can buy these big stocks with options where otherwise you would need a ton of money in your account. So I hope you see the difference. We're buying, a big stock. We're able to participate with a small, with $1,000 account, $2,000 account, $5,000 trading account. You can still buy Boeing and participate, and you can risk at most $465 in this example on that call. Okay, so if Boeing continued lower more than $5, if you had been in, so again, I'm comparing, the most we can lose is $465. If you had bought shares and Boeing continued lower, which it did during the day, you're going to lose $100 for every share if you have 100 shares. So again, I say, which is more risky, options or shares? If you know what you're doing, and I don't even know what I'm doing with options. I'm an imbecile when it comes to options, but I know how to make money, and I know how to limit risk with options. If you do it so simply, it's easy to do. So to me, buying shares of stock have more risk than options do. All right, one more time. Here's what's going on. So price is coming down to our buy level. I'm not going by the price. I'm going by the lines on my chart. It just happens to correspond with $149. I'm not saying, oh, well, if Boeing comes down back below 150 to 149, that's where I'm going to buy. No, I'm looking at my lines, those squiggly lines. That's the key for me to make my decisions. So as it comes to my lines and 140, I combine those factors and I say, well, you know what? A lot of times they like to break round numbers. If it pierces through 149, another 10 cents, that's even better because they love to break those levels. So it does. It comes down, and there you go. We buy the calls for $465, those $150 calls. We planned all that. We have our finger on the trigger. Immediately, we put our sell limit order in for $4.85. That's 20 cents higher. Again, this is how we're going to get that 20 cents. For example, If we buy 5 calls at $4.65, immediately we put a sell limit for 4 of those, because that's 80%, at $4.85. You see that? From $4.65 to $4.85, that's 20 cents. So it's very important for you to get this. That's how you get your 20 cents. Next slide. Here's what it looked like again when we bought in. Very red. Looks like it's, dropping like a rock. Nevertheless, we pull the trigger at that precise level. So one more time, it pierces. Oh, I'm going backwards. Here we go. It's almost, okay, so we pull the trigger, we're in, and it's almost immediately the stock pops up when those algos are reacting there. There's no thinking, okay? The second we bought in, we already had our sell profit targets 20 cents up already there. They were already in the system. We didn't wait to try to catch it as it went up 20 cents and pushed the sell button. No, we had our orders already there. Please understand this. The orders were already there waiting. As soon as price went up into them, they're executed immediately. No thinking. It's already a done deal. It's so quick sometimes you don't have time to react. And then the other thing I want to say here is, look, 20 cents is not, much of a move. 20 cents, it sounds like nothing, but here's the beauty. Look at this. Okay, say you get 5 calls and you sell 5 calls with 20-cent profit. That's 5 times 20, that gives you $1 in profit, okay? $1 in profit in those options is $100 of profit, because remember, each one represents 100 shares. So whatever profit you make, you multiply it by 100, right? So 20 cents profit is actually $20 on each one, times 5, that's $100. Hope you can get this. In a 20-cent move, which is over in the blink of an eye, you can make $100 on 5 of these. So just so you understand, let's go over it again. We bought the $150 calls. At the time, the price was $4.65 for each one. So 5 of those, that's costing $23.25. So the actual, dollar amount it would cost us is 100 times that. So $23.25. So basically $2,300. We bought 500 shares of Boeing. $2,300. Now, going back to our comparison, if we'd have bought 500 shares of Boeing actually, common stock, that would have costed us right there almost $75,000. So you would need $75,000 in your account to be able to buy 500 shares, where we only needed $2,300. So I hope you're getting the power of the options here. Now, let's see what happened. They popped. We sold 4 for 20 cents. You remember, we sell them 20 cents higher. That's a sell price at $4.85. So right there, we booked 4 times 20 cents times 100. That's $80. 4 calls. The reason we're selling 4, remember, that's 80% of our position. If we had 5, that's 4 out of 5. We made $80 on that 20-cent move. And that was in about a minute. I'm going to show you the timestamp on the chart. So it hit, boom, bounced, 20 cents, we're out. No thinking. The orders were already in there. So now we're left with 1 call. And here's how it looked on the next candle. You get another pop. And look at the timestamp again. So look up at the very, very top. This was at 12:15 and 42 seconds when it popped up that second one and hit right there. Here was our entry at 12:12. So basically 3 minutes, right? So it hit, boom, boom, all that in 3 minutes. Or 3 minutes and 40 seconds, roughly, if you want to call it that. So almost less than 4 minutes. It's very quick. So it pops that second time. What do you do now? If we have 10 calls, it gives you a little more flexibility. So with 10 calls, you can sell 80%, which is 8 on that first one, and now you have 2 left over, so you can sell 1 now and have the flexibility for 1 more to hold in case there's a bigger move, right? So 10 calls, you can manage that way. You sell 8 on the first 20 cents, then you have 2 left over, you can decide to stage out. In our case, we only had 5, so we sold 4. I'm doing the conservative thing, and I'm banking that last one I've got right into that second pop. Okay, so I sell my remaining call right into that, and here's why. That was also the highs from the morning. There's another pivot level, and they already tried to sell off at that level earlier in the morning, so I know it's risky to try to hold through that level. Again, no pigs, no greed. Bank it when you've got it. So that had just happened to be the $151 price level. I'm not looking at the price. I'm looking at my lines. So the main thing I was looking at was that R1 pivot level and also the 8-period EMA, which is now coming downward. And I know that the robots are going to be trying to sell down as soon as it hits that thing. I'm not covering that right now, but the robots are buying and selling both directions. We can't react and think that fast. So I'm anticipating some trouble at that level. That's why I exit. There's always factors that in time you'll understand all these factors and you can make a plan. So what I do, I execute a sell limit order at the ask price. Okay, so I bought the entry at the bid price. I'm selling on a limit order at the ask price. These are nuances which are going to give you the most bang for your buck in these tight moves. I'll go over all that later, but that always gets you a few extra cents on your pricing, and that pays off over time. So as soon as I execute that at the ask price at that moment when it's hitting that blue line, the price was $5.90. Okay, so you understand we bought them. The price was $4.65. Now they went up in that 3 minutes. They went up to $5.90. If you can believe that, they went up $1.25 in less than 4 minutes. And the corresponding stock move was 149 to 151. That's $2 in 3 minutes. That's how fast this thing is moving. So it's not like some of these other stocks that, they barely move, or they might move a couple of dollars in a day. That's why I'm trading a stock like Boeing. These things move. $2 in 3 minutes is like nothing. That's how we're capitalizing big money in small moves. So that was the profit on that was 1 call remaining, $1.25 in profit, 125 bucks. So less than 5 minutes, I made another 125 bucks. So what I'm trying to say is on the chart, it looks like a small blip, but that was actually a $2 move in the stock, and it was a $1.25 in our option price. So there you go. There's how it looked after the fact, and where I got the prices showing. So take this slide, pause the video on this slide, and study it and study it and study it. That teeny little precise move right there, you can make a living on. A little $2 move you can make a living on. So let's review one more time what all happened here. So price was coming down. We were anticipating a place to buy in. We bought 5 calls, costing us a total of $23.25. They were $4.65 each. That was the limit bid at the limit at the bid price for that strike. I know it's a lot of options terminology, but in time you'll get it. Most of you probably already know more than me what I'm saying here. So real quickly, we sell 80% of them. So that's 4 of 5. We bank 80 bucks on that. Then we have one left over. We made $125 on that one remaining one. So I put 10 minutes here because it's 2 candles, but the reality was it was 3 minutes and 40 seconds. We made 200 bucks with only a little over $2,000 of buying power invested. That's all the capital we need. We made 200 bucks. We made 10% of our money in less than 5 minutes. I want that to sink in. Let's look at it again. Burn this into your brain. That little blip right there at that precise level, that little pop, those 2 candles, we made 200 bucks with only $2,300 in our account. Do you think you can do this? Yes, you can. You can make 200 bucks a day easy. Okay, now what happens next after this? Well, it's simple. We don't care. We don't care what happens next. We made our 200 bucks on the day. We've got no positions left. We have to babysit, fretting over what they're going to do. We can either look for another trade opportunity or we can go do something else. We're not getting married to Boeing here, okay? We're not getting married to this position. We're going to look at Boeing tomorrow and see what is happening tomorrow. At this point, we're out. We don't care if that thing continued to go higher all day and we missed out on a gigantic move, or if it tanked. We don't care. We're out. So the value and the power and freedom in that is immense. We don't have any stress, nothing to worry about, and we can go eat lunch without a second thought. That is so immensely powerful on our psychology. So I want you to reflect, and what I just showed you can absolutely change your life. Study this and get a grasp on what I'm trying to show you. Once you get this and get good at it, your life will never be the same. Once you're good at doing this, you can have the confidence. So I'm talking about 1 call or 5 calls. When you're good, you can have the confidence to do 10 calls. So let's look at it. 10 calls would have netted you on the first 20 cents, right? 10 times 20 times 100, that's 200 bucks on that first little pop. Or let's say you sold it, that's if you sold all, all 10 right there on, you made 200 bucks in that first little hit. Boom, it's done. You're out. So simple. Make 200 bucks. If you sold 80, if you're going with the 80% method, then you would have got 160 right there really quickly. And then on your second exit, as I show here, you made another 250. So there's 400 bucks you could have made on this trade with 10 calls. What about 100 calls? It just goes up from there. You would have made $4,000. So if you were, if you had the confidence to hold all 10 for that second little pop there, which is very easy to do once you're comfortable, especially you got that first good reaction, they're going to probably hit that second level. It's easy once you're confident. You hold that 10 calls for the second one. There you go. You would have banked $1.25 on 10 calls. That's 1,250 bucks in 10 minutes. But as we know, it was less than 5 minutes in real time, as shown by the time stamps on the screenshots. So 10 calls, you could have made 1,200 bucks. Again, I'm telling you, this is how you change your life. 1,200 bucks in a few minutes with precisely calculated entries and exits. Let's say you got 50 calls. You could have made $6,250, and those 50 calls would have only cost you $23,000 in buying power. Nothing like the $75,000 for what we say 100 shares. So there's no comparison with what you can do with options. Okay, so I know what you're kind of thinking right now. You're saying, yeah, Wayne, but how much am I risking? You're saying 50 calls, I'm risking $23,000. That's a good question. Let's say we were completely wrong and Boeing dropped against us, right? What if? Let's give an example with one call. Okay, so we paid $4.65 for one call. Now, once you see that reaction and price moves up quickly out of that buy level, what you do, you put in a sell stop limit for $4.55. Okay, that means it's 10 cents below your buying price. So you bought it at $4.65, you put a stop loss at $4.55. That means the most you're going to lose is 10 cents. So if that option drops back down 10 cents, you're taken out. It takes you out of the trade. The whole position's gone for a loss of 10 cents. You only lose 10 bucks. All right, that's on one call. Say you got 5 calls and it dropped that 10 cents, you're only going to lose 50 bucks. And similarly, with the 10 calls, the max you're going to lose, that's 100 bucks. So what I'm telling you here, when you get a good reaction, you put a stop that tight. With 10 calls, you're basically only risking 100 bucks and the chance to make that 6,250. That's best case in this scenario. But as you can see, the risk reward is off the charts. Whereas other people trading shares risk $1 to make $2, that model is out the window. Okay, forget about that. I'm showing you something much, much, much more powerful. It's a different line of thought. We're thinking outside the box. Okay, the other thing is you don't sit there and let a winning trade go against you. It's discipline. Okay, it's back to the analogy where we're walking into the street in the crosswalk. You're going to get a reaction there or not. So usually you get the reaction and you get that first take profit sell order hit. So it already takes you out, it banks your profit, and you got no risk left. If it doesn't, that is, if the car doesn't stop and goes on through, maybe grazes past you and doesn't stop when you step out into the crosswalk, that is, the price continues to go lower and doesn't work, then you just exit, you know, you just immediately exit for a minute loss. It didn't work, and you know that almost instant. You're expecting an instantaneous or near instantaneous reaction. So as it's developing, I'll go back to that early morning example, um, where it's kind of hovering there. I'll show you that in a second, but as you're entering, you give it a little room and a chance to react. But as soon as it starts moving up, you put your stop in place 10 cents below your buy price or even break even. Once it goes up a good bit, especially if it hits that 20-cent target, you set a stop for break even. You've got no loss if it comes back. So to be clear, you're not risking that full $465 on every call. Again, with our example, with 10 calls, you can lose $100 if you play it really tight like that. So let's see what actually happened with Boeing, once we got out right here the rest of the day. As you can see, that was the end. That was the last high right there where we exited, and it dropped all day long after that. So what I'm trying to show you is we were wrong, right? We tried to buy in. Here was the thesis. We tried to buy Boeing for a continuation for a higher move. We were wrong, but we still made money. Okay, we still made our money, and it was in the bank. We didn't sit there and say, oh, well, I exited right there, all after the fact. We already had our targets in, and they were hit before you even had time to think or react. So, again, wait a minute, we were looking for a move higher, but we're wrong, we still made money. So this is how, when you make a precise entry, a precise level, using consistently successful results, that we got the profit in there very quickly. We had a plan and a method with rules that guided our actions. This is how, even in the emotion and the uncertainty, we have these rules and methods that guide the actions that give us a winning strategy. So going back to the morning trade, remember when we exited up there at that R2 pivot level? That ended up being the very high of the day. So if we were sitting there trying to hold, we would have let price come all the way back down. It would have come down to break even and then gone, taking us for a loss. And I'm going to tell you that, I just want you to imagine the toxicity psychologically that causes. And I know many thousands of times I have been there. You try to hold it. You're thinking it's going to move. You think it's going to move onward and upward, and they just come all the way back down, and you trying to hold it. It's so much frustration and anxiety. This eliminates all of that, and it's actually psychologically fortifying. So the second time later in the afternoon, we tried again for another move up. We took our little piece out, and then guess what? Our trade is over. BA went ahead and tanked, but it did not cause us any stress. We're already out of it. So there was no stress for us. So I'm telling you guys, this is going to change your life if you can get this. I was going to go over the chart a little bit. I was just going to, let me go over this before I close. I know this video is kind of going on long here, but I want to show you, in the morning right here when I said we did 3 entries and all of that. So the first entry, it pops up, we get our 20 cents. The second time, this one, when it shoved down here, you would think, oh, it's over, it's going, but this is still a confident area to buy. So we buy here, it stabs down below, so we are actually getting run over here. But this is where I'm talking about you give it a little room because you have confidence here. You still have this pivot level, and you just have to, it's like standing in the crosswalk. You have to trust that those cars are going to stop. So it did move down a few cents against us, our option price. So we entered right here, but it did move down, but it's not, you give it a little bit of a chance. Then you see a quick reaction. Then you can quickly get your stop to break even, and you got that 20 cents. So we were only under pressure for a couple of seconds, a little bit. And if it would have continued on down, continued dropping, then you just exit out. Like if it goes, you make a decision, like it went down 20 cents against you, you just get out. It's instantaneous to exit these things. So you don't have to worry about liquidity and all that on these stocks. So you're not risking that full $465 on every option. That's another important thing I wanted. So when it's hovering down here and still stabbing lower, you still can have the confidence to buy. So it shoots up here again, then bam, they slam it right back down again. That's just another buying area, guys. So you can get it. If you're aggressive, you can nail this thing 3 times here. And each one we have more confidence because of that reaction when it pops up out of there. And so I hope you can kind of see similarly with this one when it stabbed down through and my finger's on the buy trigger. I'm waiting. I'm going to see if it's going to come all the way and touch this yellow line. So anywhere in this little, let me see if I can draw where's my little guy here? Oh, that's not it. Never do something live on a video. Anyway, I'm looking in this anywhere in this little area right here that you can buy. Where's my little doohickey guy over here? I'm not used to this drawing on these charts just yet because I use another platform, but it hasn't been working well on the internet. But anyway, right in this little area right here, that's where we're looking. So it's not exactly on the line. It's in between these 2 lines. That's our crosswalk. That's our crosswalk zone. So it penetrates down into there. Even if it breaks that 149, like I was saying, that's even better. So even if it would have pierced the yellow line, you can buy there. Even better. And then it pops up and you just sell quickly. So guys, I'm telling you, I hope this is crystallizing in your minds of the potential. I hope you're racing away with confidence that you can do this. I'm going to be going into more and more detail to get you going on how you execute on this. It's going to change your life. So, thanks again. Signing off.